let's talk about Apple. Their growth compared to some other companies in that big tech space, not as big, but hey, I mean, look at their revenue, look at their profitability compared to others. It is impressive, and they're investing outside of Silicon Valley, including really close to where you are. How do you gauge the importance of these companies to the economy, taking into account not just their stock prices, but also where they're spending?
No, Apple is very important for America. This is why there's a bit of a dialectic here where there's, two different sides to this argument. On one hand, there's all sorts of abusive practices where they become a monopoly and they could do what they want, and they could really cause problems for people that are very unfair as a huge part of our economy. On the other hand, you want a strong Apple. You want strong big tech companies for America, because if they win, it benefits our whole country. So you don't want to come swinging at these things in a way to hurt them. You probably do want to hold them a little more accountable for some of their sketchier behavior, given they're such a big part of our economy now.
Joe, good morning. It's Deirdre. Now, you also said in our pre-notes that these companies are fine bets if the government lets them exist. Do you expect regulatory scrutiny, regulatory pressures to start to weigh on shares this year? I mean, we haven't seen much response from investors over the last few years that scrutiny has been heightening.
These guys are really good at playing the regulatory game. When you're a big company who's that large and that successful, you're going to have thousands of lawyers, and you're going to be really good friends with everyone running things in D.C. And so these guys are playing the game right. The question is, are the regulators courageous enough to step up and force these guys to behave? Are they willing to force the App Store, which is clearly a utility for our economy at this point, to have clear rules that they don't change on people, so people invest millions of dollars and then suddenly they change the rules? There's all sorts of ways in which it's unfair for small businesses, it's unfair for the innovation economy, for them to be able to have this utility and then just treat people however they want. So I think you are going to hopefully see the courage to come at that. And that's going to, and hopefully they do it in a way that keeps Apple still strong, because we want Apple to succeed for our economy, but not holding the big tech companies accountable, whether it's free speech, whether it's the press, whether it's these app platforms. That's going to be dangerous if we don't do that.
Joe, I wonder if you've been thinking about the degree to which there are pockets of the market where valuations have really been hurt badly in the last 3 or 4 months in mobility, and obviously SPAC issuance has come to a halt. But it seems to be masked by the continued enormous size of these giants in which money is passively invested. And I wonder if you think it's clouding things about the economy or the market that we should be paying closer attention to.
The last 10 years, people get stuck. When the trend goes on for a long time, you get very complacent about it. The last 10 years has been extremely good for the big tech companies, the big tech monopolies. They've basically grown to the point where they're dominating the entire economy. And a lot of people are assuming that's just going to keep going for the next 10 years. I think there are areas where the moats are very, very high with these big tech companies, but there are a lot of challenges, a lot of change, there's a lot of shift in spend in a lot of new areas around the enterprise that the market's not really pricing in yet.
And Joe, we're talking about investing really writ large. I want to ask your take on capital gains. Now, capital gains tax hike, perhaps. Now, some would say that if this hike goes into force, and I don't know if it's good policy or not, but that it'll destroy Silicon Valley. Do you agree?
It will definitely harm the innovation economy. I think there's a few key things here. Number one, like the way to maximize revenue with cap gains, and this is a bipartisan study, is somewhere around 28 or 30%. Putting it at 43% just takes less revenue just to punish people. Who are you punishing? Well, a lot of people you're punishing are the employees who are deciding, do I go work for the big tech companies and just get a bunch of cash each year? Or do I take a bet on a new company? Do I build something in the innovation economy with my skills? And if you have a cap gains rate that's lower, then that is an incentive to go and help build something new. Whereas if you're going to be the same anyway on income and cap gains, you might as well go make $3 million a year at Google. And it's actually a much better deal at this point to go to the big company. So yeah, it definitely helps the big companies. It hurts us who are trying to build new things.